Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Let's quickly begin with markets at close. My colleague Suyash Maheshwari in the studio with me. Suyash, good afternoon.
Hi Shweta.
How are markets doing?
Markets closed on a flattish note today, Shweta. Now we saw in the morning the markets opened deeply in the red. Both Nifty and Sensex were down about 0.4%. But by the afternoon trade, both indices had paired losses, but it pretty much stayed, kept hugging that trend line throughout the session. Both the indices tried to move higher through the day, but we saw some resistance for Nifty coming in at 750 sort of levels. Now Nifty managed to close at 19,731, which will be good news for the bulls as the index has held that 19,700 mark on a closing basis. Sensex ended about 115 points lower at 66,166 levels. So the index has held above the 66,000 mark. Now the broader market, Shweta, were buoyant today. Both the small cap and the mid cap indices ended with about 0.2 to 0.3% higher. The Nifty mid cap 100 was up about 0.2%, whereas the Nifty small cap index was up about 0.37%. What the bulls will not like is the spike in volatility that we are witnessing. India VIX went up by 5% and it closed today at around 11.15 level, which indicates that the volatility over the next 30 days is expected to be higher, given that the kind of developments we are seeing in global markets as well as Indian markets, also because of the earnings season that are ongoing. Now talking about the sectors specifically, Nifty Bank is expected to remain in action throughout the week. Now,
Lots of results will pour in.
Lots of results. We had, HDFC Bank come in today. Federal Bank also came out with its results today. Bank of Maharashtra, Karur Vyas Bank, and a host of banks, throughout the week, from ICICI to Kotak Mahindra. So a lot of action in the banking pack. And if we look at last week's performance, Nifty Bank was one of the draggers of headliners in the last 1 week. And the expectation, we saw the correction because of the fact that earnings this time around could be muted, but Nifty Bank today managed to stay above the 44,000 mark. In fact, it closed at around 44,200 sort of levels, but it was down on a intraday basis by around 0.14%. Now the auto index, Shweta, which was hovering around 0.6% higher in the morning, saw a slight bit of correction and it closed at around 0.45% higher. PSU Bank, Shweta, were outperformers today. We have seen that the results and PSU Bank stocks in general turned highly volatile since last week, after the kind of run up we saw after the since the beginning of the financial year. So PSU banking pack ended about 0.72% higher.
Okay.
Another sector which was a clear winner in today's trade was the Nifty metal pack. The Nifty metal pack rose about 0.91% in today's trade. In fact, since October 9, the index has posted a strong set of gains and it is up about 2% or so since October 9. No particular trigger, but China is expected to declare its Q3 GDP numbers later this week. So perhaps the expectation is that we'll see some sort of an uptick in the economic activity from China. As a result, the metal stocks were rallying. Apart from metals, other sectors in focus today was the IT pack. Nifty IT ended about 0.2% lower. FMCG also saw some profit booking taking place. It ended about 0.23% lower. Realty, which was a clear outperformer in last week, was also under pressure this time around. In this session, it was down about 0.34%.
All right, that is the outlook as far as markets is concerned. Amit Gupta of Fintrekk Capital joining us on the show. Amit, good afternoon. It's been a while since we last saw you. Thank you for joining us. What are you making of the losses that we are looking at in markets this morning? Is this going to be the trend, given that global uncertainty is weighing on not just on India, but on all global markets, all global equity markets, come to think of it?
Yeah, good afternoon, Shweta. Good afternoon, Suyash. I think if you look at the overall market, in the past 1 month or so, they have been in a consolidation phase only. So while valuation seems to be a little on the higher side still, but it is not alarming as such. Neither it is very lucrative. So when these kind of things happen, usually market consolidate and look for either positive or negative triggers to move on one side. So I think we are somewhere in between. The global headwinds are sort of pulling us down a little bit, and earning season has started, so probably a few positive triggers will come from there. Till that point of time, I think it's going to be market is going to be very stock specific and not really bother too much about the benchmark indices.
All right, and since we are on earnings season, HDFC has declared its results. It's come out with its second quarter results. We'll go to those results very, very quickly. But JFS, Financial Services, is also going to declare its results today. What is the expectation, Suyash?
I mean, broadly speaking, Shweta, the expectation is that it will post a good set of numbers. In fact, if you look at the broker calls on JFS, most of the fund managers are bullish on the long-term prospects of the non-banking financial company. However, if we look at the data, it says something otherwise. In the past month or so, mutual fund holding in JFS has reduced by about 2% from 6.63% in August to about 4.71% at the end of September. Now, JFS, if we talk about, I think one of the things I personally will be tracking as far as JFS results is concerned is the revenue mix of the company, because at the end of the day, we are seeking some clarity what the business model of the company will
Lots
be.
Lots of clarity is needed.
Yes, so JFS, in its AGM said that it will enter the insurance business and it will offer life, general and health insurance products. Also, there were reports that JFS has tied up with BlackRock and they are planning to launch the asset management AMC business. And then we have expectations that it will, enter the lending segment also, given that given the strong reach of Reliance Industries in the Kirana store presence. So perhaps a lot of the other than the numbers, the focus I think this time around will be on what the revenue mix of the company is going to be like.
Okay.
What businesses are they in?
Absolutely, and we'll talk about that. But let's quickly jump into the HDFC merged entity, declared its results this afternoon. Let's quickly throw those numbers up for our viewers on our screens. How are the numbers looking like, Suyash?
Shweta, I mean the first draft, it looks like the numbers are largely mixed. If you look at the profit figures are around 9% ahead of the estimates. Profit for the Q2 FY24 currently stands at 15,976 crore, whereas the expectation was that it will come around 14,616 crores. And net interest income, which is the difference between interest earned and interest spent, declined by about came in 2.8% lower from the expectations. Net interest income rose to 27,385 crore versus the expectation of 28,187 crore. Now, Shweta, the numbers are largely not comparable with the previous year's quarter, because these numbers also include the figures of HDFC Bank. Last year's number was pre-merger, so it was standalone numbers of HDFC Bank. Now, looking at the other numbers of CNBC, it seems that interest margin has, the gross NPAs have risen on a quarter-on-quarter basis by 65.6%. Now, the absolute figure stands at around 31,578 crore in Q2 FY24, whereas in Q1 FY24 it was around 19,064 crore. Net NPA, the absolute number stands at around 8,073 crore for this quarter versus 4,776 crore in the previous quarter, which is a 69% quarter-on-quarter rise. Now, if you look at the margin, gross NPA margin stood at around, gross NPA stood at 1.34% in this quarter versus 1.17% in the previous quarter. So a 17% decline as far as gross NPAs are concerned. And net NPAs has also reduced from 0.3% to has in fact increased from 0.3% in Q1 to 0.35%, so 5 basis quarter on quarter rise.
All right. So should that be a right sort of comparison after the merged entity? I mean, let's quickly also get in Amit to talk about these numbers. Amit, are these numbers in line with the expectations? I mean, to draw an analogy of quarter on quarter, year on year would not be correct since this is a merged entity and coming up with its results for the first time. But are these numbers in line with what you were expecting?
So I think the result just declared just before we hopped onto the call, so I haven't been able to in depth see the result.
Okay.
But we need to understand that towards the end of September, they already did an analyst call of the merger entity, and they have given the guidance of basically facing some significant challenges with respect to the refunding of the loans because of the HDFC acquisition which they did at the start of the quarter. So I think all these requirements, as mandated by say, RBI, whether it is meeting the SLR or the CRR requirements, even they have got the priority lending leeway from the RBI. Even after that, I think it's going to be quite challenging for the HDFC Bank in the near term. And it's a over-owned stock in the portfolios of many mutual funds and PMSs. So I think in short term, this could be a problem in the performance of the stock. As they rightly pointed out during the analyst call last month, also they cited a very hit on the NIMs, net interest margins due to excess liquidity. There was a drop in return on the assets on the merged basis for both the entities, and there was an increase in the non-performing loans also. I think a lot of these negatives were already priced in because the stock was down about 7-8% since September 20th when they did the analyst meet. So my sense is the numbers which have come out today are more and less expected by the market.
Okay. And
now,
yes,
yeah,
please.
Amit, the expectation was that the result this time around will be muted. In fact, in the last 1 month in the run up to the Q1 results, HDFC corrected by about 6%, whereas Nifty Bank fell about 3.5%. So do you think most of the negatives have been priced in, because HDFC Bank stock in the last couple of weeks has been consolidating at around 1530 odd levels or so? So do you expect that this the kind of movement that we are seeing in the stock is a base building exercise, and from here on perhaps the stock can take off?
No, I mean, I cannot comment on the stock price, but as far as the business is concerned, one can expect that the further negative surprises should be negligible. But I still think that the re-rating is some time away, as bank has to work through the NIMS transition because of this merger and builds its thesis of differentiation, which I think most of the analysts are less certain about in the current environment. There is a reduction in net worth to account for the policy, accounting alignments, dividend payout, etc. So I think there are, I don't expect too many negatives, but I think for the stock to really perform on the stock market, the re-rating has to happen, which could be another, 2 to 3 months, 2 to 3 quarters of.
Okay. So what's your position on the HDFC stock then?
It's a neutral as of now. We don't have a active rating as of today.
Okay.
We are sort of wait and watch kind of a mode into that. We are not recommending any fresh buys, but if any any investor has it in the portfolio, they can hold it for a little longer. But I would not jump to add on to the stocks. Wait for the merger details to fully flesh out over the next couple of quarters and then take a call in this period.
Now, Amit, a lot of other banks have also come out with their Q2 results, in the last few hours or so, including Bank of Maharashtra, Karur Vyas Bank, Federal Bank, and a high-level view suggests that the profitability has continued to improve on a quarter-on-quarter basis, and we have also seen an improvement in the asset quality, which pretty much was a theme back in Q1. So, do you see for the banks Q2 be a repeat of Q1? Or has anything changed materially between the two quarters?
No, I think the Q1 results they have continued in Q2 for the most of the large private banks or even the mid-sized private banks like Karur Vysya and Federal Bank. I've seen the result of Federal Bank. I think the asset quality has actually improved. The slippages are at almost 8 to 9 year low. I think most of these banks are really getting benefited from a clean balance sheet. Now it is the question of how much credit growth can come in the next couple of years, which can help perform them in the market. I think the market is still a little worried about the rising interest rates and the names sort of topping out. So the case of re-rating of a lot of these private banks looks a little difficult, especially over the next 3 to 6 months, 1 or 2 quarters more. But the hope is that if there is no recession and if the credit growth again picks up, especially in India, then we are going to see a really boom in the lending, especially post general elections, and then we can see a much better price performance on the stock market from these private banks. So as of now, it is a continuation of Q1, but the re-rating still is 1 or 2 quarters away, I believe.
Now, Amit, we also saw that, after Q1 results, stocks of PSU banks, outperformed the private banks. This time around, what are your expectations? Can we see some convergence in the performance, given that, valuation at least look attractive for some of the private banks?
And given that PSU Bank
have already rallied.
They have rallied.
And the returns have moderated in the last 1 week.
Absolutely, and the returns have moderated. Looks like there's some sort of consolidation phase they're heading towards. Your expectation of the PSU banking pack?
So I think business-wise, the expectations are similar. I think they have a good run-up. With the return-wise, also they have cashed up. Valuation-wise, also they have cashed up with private banks' valuation. In the last 10 days or so, the price performance has also moderated a little bit. In fact, through few brokerage houses have given sell calls on PSU banks as well. So my sense is that the return on equity is expected to sort of moderate in the near terms. Because of the low leverage on the balance sheet. They can still, ROAs can still sustain at 1.8, 1.9% kind of thing. So we remain constructive on both the top PSU banks and top private banks from a medium to long-term perspectives. But our expectations from a short-term perspective over the next 3 to 6 months, that is quite low at this point of time. And only once we see, sort of names, again getting on the upper side, then only we will have a look at banks, fresh position or even increasing the positions.
All right, Amit, I think we'll leave it at that. But let's quickly also move on to Jio Financial Services. Remember, offshoot of Reliance. Reliance has capitalized JFS with over 1,20,000 crore rupees to create one of the world's largest and highest capitalized financial service platform since its very inception. Now, JFS's current market cap stands at 1.42 lakh crore. It's the third largest NBFC after Bajaj Finance and its holding company Bajaj Finserv. JFS has partnered with globally renowned BlackRock to enter the asset management industry. All eyes will of course be on its plans to enter the lending segment. Analysts believe that JFS will go on and go very big on merchant and customer lending thanks to its parent company's wide reach in Kirana stores. As of June end, Reliance Industries had a total store count of 18,446 with registered customers over 26 crore. JioFin, what will the results mean? I mean, let's accept we don't even know what the business model is. I am surprised on what is going to come out of those results, but I think it's the management commentary that everybody will be keenly eyeing.
You're absolutely right, Shweta. Management commentary will be key this quarter because, as I was saying earlier, we don't have much clarity on what the business model is going to be like for JFS. We know that it's going to enter the AMC business. We know that it's planning to enter the insurance business. There are also talks that it may enter the merchant and customer lending business given its given RAL's wide reach in kirana stores, but ultimately what the revenue mix is going to be like, who will be the main contributors to the entire revenue of JFS will be keenly eyed. I mean, if we have Amit, what are your broader expectations from JFS and what will you be eyeing from the Q2 results of the NBFC?
So I think they're very new to the business. I think they have probably less than 30 employees which are currently working. So the expectation from Geo Financial is not huge from a earnings point of view. Uh, Obviously, the commentary can be looked at and how they are scaling up. But whatever the public announcements they have already made on the stock exchange, I think the things are quite slow. See, we have to look at the history of Reliance and how the Reliance have done the things. In many of the businesses, they have been able to scale it up, but not necessarily profitably. They have been able to scale it up. So I think that's the challenge. Secondly, the kind of businesses which they are getting into, whether it is lending business or insurance or AMCs, a lot of these businesses, there are huge amount of regulatory issues and entry barriers because of various things.
It's
And
going
in
to be a
financials,
cakewalk for Reliance. Come to think of it, Amit, we're talking
no,
about
I don't
Reliance
think
here.
it will be a. No, I don't think it will be a cakewalk. In financial, there are already well-established, large-size financial institutions across the banking and the NBFC universe, and so even some of the fintechs are now
Okay.
also there, which are reasonably well-established and large enough. So I think the expectation here is that
So
they're not going to
will
get a free run.
regulatory clearance will be a challenge, or will market domination will be a challenge, or
So
acquiring new
regulatory
customers?
clearance will take time.
Okay.
The AMC license is not expected to come over the next 9 to 12 months. So how can we price in anything related to asset management at this point of time? Insurance license is not going to come in the next 1 year. So the only thing which they are doing currently is the lending business, which they are doing it through the Reliance stores. So I think the market in general is running ahead of it. The expectation why a few of the mutual funds have invested is that they are saying that once Geo Financial start growing, then the initial run up in the growth will be very fast, and that's why the price movement in stock might happen. But at current valuation at 230, 240, I think a lot of that is already in the price. So we could see a long time sort of time and price correction and stock not really doing anything for a long period of time.
All
Having a
right.
sustainable and a profitable business, I think we are still 2 years away in Geo Financial.
Okay, 2 years time is what Amit is giving it. But while we're at it, let's also quickly take a look at other stocks that we're tracking.
Yes, Shweta. So among the top gainers in the Nifty pack today was Hero MotoCorp. The stock has surged about 2% or so in today's session. Now there were some comments from the management that it expects a 30% increase in booking this festive season, and inquiries have in fact increased by around 20%. So on the back of this, Hero MotoCorp is factoring in a double-digit growth in this festive season. As a result, we have seen a good run-up in the stock, and it was up about 2% in today's trade. Now, steel stocks, Shweta, as I said, saw a fair bit of a run-up today in a broader, amid a broader uptick in the metal pack. Now, metal pack, as I said, has been on a bit of a bull run, and since October 9, the Nifty metal pack has increased by about 2% or so, and we are seeing a good bit of movement coming in steel stocks as well, where JSW Steel was up about 1.7%, and Tata Steel also ended 1.5% higher. Now LTI Mindtree was another stock which featured in the list of top gainers. The stock snapped its 3-day losing streak to surge about 1.3%. Now the company will declare its Q2 results on October 18th. And the expectation is that it will perhaps fare better than some of the other companies that have come out with its results. Among the losers, Shweta, was DV's Lab. Now DV's Lab has been under pressure lately. In the last 1 month or so, the stock has corrected by about 3.5%, but on a 6-month basis, the stock is still up around 15% or so. Nestle India was another stock which was among the losers today. The stock ended 1.9% lower. Now this was after the run up that we have seen in stock prices. On Friday the stock was up about 2%, and in the anticipation of the stock split that is expected to happen, the board will talk about it in its upcoming meeting on October 19th, by the way, which will also be the date when it announces its Q2 results. The expectation is that perhaps Nestle is going to go for its first ever stock split. So the stock was in an uptrend, but today we are seeing some profit booking taking place. TCS continues to be under pressure since its Q2 results. In fact, in the same time frame, in the last 5-6 sessions, it has corrected by about 3% or so. Today also it was down about 1.3%. IndusInd Bank and Asian Paints were some of the other losers. Both stock corrected by about 1.2%.
All right, let's talk about top gainers first. Two steel businesses in the top gainers this afternoon. What's weighing in on the steel industry?
Actually, I couldn't find any report on why the steel stocks are rallying, but there are also reports surfacing that we can perhaps expect a uptick in the Chinese economy.
Okay.
The numbers are due to come out later this week. Q3 GDP data is due to come out this week.
Let's get Amit to talk about that. Amit, are the markets expecting an uptick in Chinese growth and consumption, hence upward rally in steel stocks?
I think that line of reasoning one can expect at quite a lot of points in the past 6 months or so, because the Chinese economy is going through a slump, so there is always a expectation that they are going to come up with a stimulus package, and that sort of increases steel prices. But we have to look at our own government's infrastructure boost, which is pushing the demand for the steel. So I believe that one should remain bullish about the sector's prospects. A lot of these have been trading in range for quite some time, so there are some sort of a technical breakout also in that. But given the infrastructure push, all the railways projects, the infrastructure projects, the port projects, etc., the steel consumption within India is about to increase. So even if we don't get a stimulus out of China, even our own consumption patterns are sufficient enough to generate good demand out of it. Apart from that, around this time there are always expectations about changes in the taxes and the import duties on steel, which could again favor a lot of the companies. So I think these are some of the catalysts which are driving the demand. I'm not sure people are sort of expecting too much out of China given the slump they had.
Okay.
But one could see some sort of import duties put on steel in the coming months.